Hello everyone, my name is Matthew Frailey. Founded Breakpoint Trades 21 years ago back in 2003 to provide the most advanced technical analysis, market commentary, trade ideas, and my passion, which is developing mechanical trading systems such as our 21 SPY and ES mean reversion systems, our amazing KISS systems, other systems, our a lot of stuff here, active community, 5 newsletters a week, dozens of actionable trade ideas, system trades, tools to manage 401k, you name it, got a lot of things here. Anyway, let's go and get back to this video at hand. Hope everyone's had a nice weekend. This is my extensive weekend technical analysis review of the markets and trading systems. It is Sunday, October 27th. This is our back-end recorder for our website subscription service. The newsletters, remember, are in not just YouTube format, but most of our newsletters are in audio web page style. So anyway, I'm going to get that recording started now for our subscribers. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, hope everyone has a wonderful weekend. It is early Sunday afternoon, October 27th. This, of course, is my extensive technical analysis review of the markets, commodities, sectors, bonds, precious metals, and of course our trading systems. Good. As far as this weekend newsletter, if you happen to be new to Breakpoint Trades or new to YouTube, these weekend newsletters tend to be longer than our normal newsletters. Anywhere from 40 minutes to close to an hour. Again, with Breakpoint Trades on YouTube, we don't dumb these newsletters down for the short attention span TikTokers. We go over the charts. It takes as long as it's going to take. So this isn't made for, those of you who can't manage watching something more than 5 minutes. But anyway, weekend newsletters tend to be quite comprehensive. Make our opening statement here. I'm going to go into some admin things. So one of our mean reversion systems, the trend Momo, went long late last week. That is still long. Then I'm going to go over some of the KISS systems. That's been doing amazing, and the KISS high performance system's been doing beautifully. And congrats to those of you who subscribe to that. If you've been following the systems, you should be doing well. Then we'll move back to the general market newsletter. We're going to cover the major indexes first. I do that top-down approach. And because it's the weekend, we'll look at the monthly, weekly, daily, and intraday charts on those indexes. We'll look at some market indicators, the VIX, and some various breadth indicators. We'll also look at the bond market. We'll look at some major sectors. We're going to review a handful of them. We'll look at the US dollar. We'll look at Japanese yen. We'll look at Bitcoin, cryptocurrencies, commodities, precious metals, and GDX mining stocks. And finally, going to follow it up with trade ideas. So in addition to all of our other stuff, our trade ideas that we put out each week do fantastically, and added some more new ideas this week. Now, as far as this week, guys, earnings season. Okay, last week we had Tesla, and Tesla responded well. So this week we have Google, AMD, Meta, Microsoft, and Apple. So a big week for earnings. Again, as far as the market, like I said, uptrend on all time frames, long-term uptrend, intermediate-term uptrend. Short-term, I'm going to still say it's an uptrend because we're still above the 20-day moving average on the daily S&P chart, right, for now. But we're mostly in a little consolidation pattern. And honestly, for the bulls, some of these very bullish cases, the S&P really needs to hold this previous higher low at 57.62, approximately 58.20 to 5800 on the ES futures. Okay, a lot of, also in addition to the big earnings this week, a slew of economic reports, just a ton of things. The big one, of course, being the non-farm job payroll report on Friday. But we got a ton of stuff here, guys. And finally, of course, the Mideast situation. As you know, on Friday, Israel attacked Iran. But I look at some of these weekend future betting, and I don't see anything that's showing the market's reacting much to that at this point. But it's always a wild card. You got to be aware of that. Next. Again, first image below, item number 2. So these are the 4 big tech stocks that are reporting this coming week. So we have Google, okay, October 29th. Now, earnings can trump the charts. That said, Google has a really nice little pattern here, kind of a coil pattern with a potential ascending triangle pattern. Again, that is on the 29th. So let's see, Tuesday after hours. Then we have AMD reporting, not as strong of a chart. Microsoft is reported on the 30th of October and Apple on the 31st, kind of an ascending triangle. So we'll see how the market reacts to these. Usually the market, the big cap test stocks respond favorably, but again, it's still a wild card. They could go either way, so just be aware of that. But these are the big ones this week. Next, let's talk about some of the systems. So I already just stated that one of the mean reversion systems are long, the trend Momo for ES futures. So that's still long. I'm not going to cover that. I'll give you updates when we have it. Again, as far as the KISS systems, here's the standard KISS system table, and you can see very nice gains here on these trades. These are all live trades. Again, there's quite a few of you who subscribe to the service. There's a lot of you that have not. I do implore that you at least check these out, because this is a fantastic tool. Just if you want a system, you don't want to make your own trade decisions, or let's just say you're managing your 401k, you want to fire your financial advisor who is underperforming the market every year and let you go through drawdowns. Why not just use the KISS systems to replace your ETF, your financial advisor, and use the ETFs for the S&P and Nasdaq and other things. You're going to outperform your advisor. It's a great tool for that. And image number 4, of course, we have the high performance, which are these intraday systems. Again, awesome trades here too. These are a little more active than the standard ones. They have higher performance. Again, all the KISS systems have awesome, low drawdown compared to typical buy and hold. The high performance, you get notified via text message. You have to enter your phone number in the SMS area. Next, image number 5. So here's an example of one of the statistics for the high performance. This is Tesla. It's based on a 130-minute chart. Profit factor of about 10.8, which is excellent. About 51% winning trades. Again, this is typical of these KISS trend systems, anywhere from 50 to 60% winning. That's typical of a trend system. The mean reversion systems have around 90% winning trades, but remember, they're much shorter term, where these systems attempt to capture along and hold it as long as possible. So they'll catch a big trender, then they get a whipsaw to 1 or 2, and then they'll catch a trender again. Average time in trades, 58 for winning trades. Average time in losing trades is about 9 to 10. So it gets rid of the losers pretty quickly, holds on to those winners, as you can see. And if you look at to me, for the high performance, what really stands out is not so much the higher profits, but the lack of drawdown. So when you look at, this is traditional buy and hold on the right side of the table. KISS system here is on the left. First off, you can see the average number of trades per year. Less than 6. I mean, guys, you could be retired on the golf course. You could find time to do 6 trades in a whole year. Amazing gains for this. Now, again, look at your drawdown. Your average drawdown is 9% for Tesla, for the KISS system. For buy and hold, it's 41%. And here's the max drawdown was 73% for buy and hold. I don't know about you, but let's say you have a $100,000 account and you had it all in Tesla. Could you stomach having that 100,000 go all the way down to 30 before bouncing? I couldn't stomach it. So it's these, look how high the drawdowns are in Tesla buy and hold. Look how much smaller they are on the KISS. So to me, that's what I like. Look, if someone told me, hey, you can make 50% a year on average, but there will be years where you are down 50% or 60%. I couldn't do that. I would rather take a system that made 30% a year but only had 5% drawdown. That's me. I'm risk averse. But anyway, so that's what really stands out. But again, most of the years are higher. Like this year, KISS system's up about 38% versus buy and hold is 8%. So the KISS system's beating buy and hold anyway. Anyway, that gives you an example of that. And the final thing, image number 6. So here's some of the examples of the KISS systems in action. So here's the Tesla 130-minute system. You can see how it trades. It's long, it's out, it gets back long again. And it went back long late last week on that earnings. And then it pushed higher. And here's GDX. That's the gold miner ETF. It's had some awesome trades here. It's currently flat, but that last trade was a nice one. So there you go, guys. I am planning to have a live webinar on the KISS systems and the high performance systems to give you guys some tips and tricks and how I trade them, and maybe that'll get you guys, a little more guidance and more of you to start following that valuable resource. All right, so let's move on to item number 7. Let's go back to the general market newsletter. So item number 7 shows the index sector table, what transpired on Friday, and of course for the week. Again, for the week, bifurcation here, weakness especially in the Dow, down 2.7%, and the Russell down 3%, S&P down 1%. The tech has been outperforming here a bit. You can see Nasdaq up slightly for the week. That was the same on Friday as well. As far as the 21 market sectors, this gives us a nice broad overview of breadth. Very negative for the week. Only 2 sectors were slightly up here, as you can see. And especially weakness in the home builders, down 6%. That was the weakest sector, but a lot of pretty nice losses here. Now, currencies, US dollar continues to rock and roll. Man, one hell of a rally off that 5th wave divergent low that we pointed out ahead of time. One hell of a move. Surprised the market's held up as well as it has with that. And cryptocurrencies, Bitcoin is up on Friday, but down for the week. Remember, it rallied up to that resistance area, pulling back, but I do think eventually it's going to take that out. Commodities, DBC, that's the index, up 2.2%. Crude oil up 4.5% for the week. Natural gas, guys, up 37% for the week. Up 22% alone on Friday. Remember, I pointed out that major support, and boy, what a hell of a rally. Now, most of the other commodities were down here: copper, uranium, agriculture. Precious metals continuing to rock and roll as well. Gold up 0.9%. 22,755. Guys, only 250 points away from the big 3,000 round number, which has been one of my targets all year. Silver, 1.64%, almost 34 bucks. Now, GDX, the miners, down 3.7%. They tend to lead, so that's a little warning. 1 week isn't a trend, but you got to be aware of that. If that continues, maybe, gold, as I commented before, guys, I think gold's either going to have a parabolic move up here to 3,000 before pulling back, or it pulls back first, has a little correction here, and then tests 3,000 later. I think it's kind of one or the other. And as far as bonds, we continue to see big moves higher in the 10-year, 30-year Treasury yield. Again, I'm surprised the market's holding up as well as it is with that. Yield curve, of course, is no longer negative. Next. Item number 8 shows the economic news calendar for this week. Again, a lot of stuff, guys. Housing index, Case-Shiller here on Tuesday, MBA mortgage, ADP, GDP, pending home sales, crude inventories, initial jobless claims, PCE prices, and core. And of course, Friday is the big jobs report, non-farm job payroll. So we'll see where that ends up, guys. But a lot of news here. Of course, S&P, PMI, and ISM numbers as well. Next, image number 9. So here's the unemployment rate. So remember, we got the jobs report on Friday. The last time it ticked down to 4.1, but we'll see where it looks like this week. Again, I still think this works higher over time just because of the charts, the moving average cross on this unemployment monthly chart, the 5 and 13 EMAs. You can see tend to produce trends that last for years at a time. So, this crossed about a year ago to the upside. A little less than that, but I think that sets the stage for this to work higher over time and for us to eventually have a recession, i.e. that inverted yield curve. Okay, moving to the indexes. So chart number 10 below, here's the weekly view of the major indexes. Again, weakness here in the Dow, big sell-off there, right to its 9-week EMA. And for the Russell, Nasdaq, of course, holding up better here. You can see the little doji candlesticks. And S&P slightly down, but again, everything's still uptrending. Next, chart number 11, here's the daily. Again, you can see the weakness in the Dow. Below its 20-day moving average, middle Bollinger Band, lower Bollinger Bands approaching. So far, little S&P has been in this consolidation along with the Nasdaq. Last week, the S&P on Friday stalled at the supply zone, pulling back. So we'll see. Does this form a lower high and come down again or not? That little higher low on Thursday Wednesday there is important, guys. So that needs to hold for the short-term bullish count. Otherwise, I think we come down in a wave C. Of course, the Russell at the bottom's been weak. You have kind of an ascending triangle look here if it can hold that, not pull back too much. Next, let's move on to the S&P 500 chart. So chart 12, here's the monthly view of the S&P. Again, obviously no changes here. 0.8% up for the month. I'm showing this chart because this shows the secular trends of the market. And this goes back to 94. Again, we've been in a secular bull market now since March 2009. That's when that bear market bottomed. So we've been now in this secular bull market for 16 years. Okay. Eventually, this will end, and we'll have probably a decade of, one of those decades of just sideways movements, right? Usually secular bear markets last anywhere from 16 years to 20 something years. So again, we'll see how far this one goes, but still ongoing. This has been a great chart too, just for your long-term guys, particularly this 14 link stochastic. This 50% area tends to be your dividing line between bull and bear markets. If you just stay long when this is above 50%, you overall avoid the bear markets. You don't get out at the tops or back in at the exact bottoms, but you avoid a lot of that decline in those major bear markets, and you stay long during long-term uptrends. Okay, it's kind of like a paint dry system. Not for me, but for some of you who rarely want to ever make a trade, a change to your 401k, it's still a very useful tool. Better than your advisor who just rides bear markets down like 2008. Next, chart number 13, here's the weekly view of the S&P. Again, slight down move for the week. Remember, we do have this divergences we've been monitoring on the RSI and MACD. They have yet to produce any meaningful pullbacks yet. Again, we're still in this very strong uptrend channel. We got a big support demand zone below here, which we tagged at the top of last week. That's your current major support. Next, chart number 14, here's the weekly KISS trend system. So in addition to the daily and high performance KISS systems, we also have weekly versions. And again, remember, these are kind of like paint dry too. They can hold for years at a time. So for example, S&P high performance or the S&P weekly KISS system went long back early 2023. So it's been long here, closing on almost 2 years now. Okay. And current, stops are going to be wider on the weeklies than the dailies, which makes sense. Here's the Qs. By the way, Qs have been testing this. This is the weekly ATR. And you can see the other time frames. They're all been long here for a year or longer. Next, chart number 15, here's the daily KISS trend system. This is the high performance daily. Most of the high performance systems are intraday versions. This is the daily we show in the newsletters, which is also high performance. So again, still long from early August. Remember, it avoided some of that July-August correction. KISS system, great job of how it trades, gets in, has a smart trailing stop, has that protection, etc. But you can see market's been consolidating in the last week and a half so far from that DeMark 9. Those DeMarks have been pretty good when you see these, especially the 9-13 combos. You typically get corrections. So far, we've got a little pullback on the DeMark 9 there. Again, we're still above the ATR. We're still well above the smart trailing stop at 56.56, 56.60, whatever if you want to round it, or 56.55. Moving average ribbon still bullishly stacked. Next, chart number 16, here's the 4 time frames of these indicators. Again, the daily up here, which we already looked at. Half day, we're still holding that ATR. We're below the ATR in the lower time frames. Well, on the 130 minute, we're above it here on the 78 minute. So you can see on 130 minute how we stalled at the ATR last Friday. Next. Moving back to the standard charts, chart number 17, here's the daily S&P 500 chart. So remember back in July, we had that wave 3 high, just an absolute textbook 3-wave ABC pullback. Wave 4, that was a great buy opportunity. And we've been working on this move up, some sort of wave 3, some sort of C, whatever. I'm not going to get too bogged down into that. But anyway, the July highs, which was previous resistance, became support, which was tested in early October and held. That this became a demand zone, which we tested last Wednesday and bounced off of it. Okay, on Friday we rallied, and we could see we pulled back from this supply zone. So we need to take that. That's a resistance area. We need to take that out. So we'll see, guys. Again, big support down here. 50-day moving average, demand zone. 20-day moving average, 50-day. A lot of support. The question is, one count. If we can hold that higher low at 57.62, that's. Or if this is a little wave B bounce, we could need to come down again in a C. We'll see. Next, chart number 18, here's another daily chart. Just shows you the zoomed in view, you can see the channel, you can see the demand zone below, the supply zone above where we stalled at on Friday. Little indecision, candle, doji. Next, chart number 19, here's a half-day chart. Very clean chart, just showing we stalled at the supply zone on Friday, bounced off the demand zone. And we're just in this range. We'll see if this 57.62 pivot, higher low, can hold or not. Next, chart number 20, here's a 60-minute chart. Remember this rising wedge I was showing last week. So the bullish view would have that wave 4 is in place at that 57.62 area. That's why I mentioned that I would like to see under the bullish case for that to hold. If not, though, this could still be some sort of A down, lower high B, move down again in a C. We'll see how futures open. So far, indications are they'll probably open flat, but we'll see. But let's see if this 57.62 area can hold or not. If it can, then I would look for a new high in a wave 5 up here. Next, chart number 21, here's a 30-minute chart. Again, just showing the supply zone above where we stalled on Friday. And chart number 22, here's a 30-minute chart. This was that wave count I was showing late last week. Again, if that 57.62 low can hold, higher low, it's possible that's a wave 3, 4, wave 2, and we go up again. Should go up to a new high. Well, let's see if we can hold that higher low. And chart number 23, here's a 10-minute chart, the S&P with some fibs. Just showing this because you can see that low on Friday there basically tagged that 61.8 fib where it bounced off of. All right. Next, chart number 24. Here's moving to the Nasdaq triple Qs. Here's the weekly KISS system. Again, no changes. Smart trailing stop at 479 still, but right around that ATR. So far, we've been struggling around this weekly ATR. That's the weekly ATR. The cyan color, that's the daily ATR. Next, chart number 25, here's the 4 time frames. Again, similar look to the S&P, holding the ATR on the daily, half day, and we're above the ATR as well on the other lower time frames, which is now potentially support. Next, chart number 26, here's the standard daily triple Qs. Again, stalling still a little bit at this resistance area. Unlike the S&P, which took out its July highs, the Qs have not, so that's still a potential magnet as long as we can push up again. The Qs held up better last week, obviously, than the S&P. Got a higher low at 485 right now. Next, chart number 27, here's a half-day chart. Again, we do have this potential wedge here, and you do have MACD divergence. Remember, wedge patterns always have divergence on the MACD, so this definitely still is a viable pattern to monitor. We'll see. And chart number 28, here's a half-day chart. This would be one of the bullish counts where you had a wave A, B, C, and we'd go on to a new high. We did technically make a break, like a little high, new high there, but under this count, this should go much higher. We'll see if this can push on this week. Again, that'll likely be on earnings will be a catalyst as well as economic news. Chart number 29, here's a 60-minute chart. It's that little coil breakdown last week. Could have been a wave C. Found support at the 61 fib and then moved higher. Next, chart number 30, here's IWM small caps. They've been weaker. Here, kind of this coil setting up. Again, you have plenty of room to move to the lower trend line of the coil, but we'll see if we can form a higher low in this pattern or not. And chart number 31, here's another way to draw this pattern. You can see the same coil pattern. You could also see a wedge, though, within the coil that we've had marked. And chart number 32 is a 30-minute chart. Nice pullback, like I said, on the Russell, but reason why it pulled back, we had 5 waves up. 1, 2, 3, 4, 5. Remember, guys, whenever you can count 5 clear waves in one direction that don't overlap, usually you get some sort of reversal, and that's a great example. The US dollar, for example, had the opposite. It had 5 waves down, and that's why it's been such a strong rally. So that does it for the major indexes, guys. Let's move on, look at some of these indicators. Here's the VIX. So VIX is starting to move up here a little bit. The Bollinger Bands are starting to pinch on the daily a bit, so be aware of that. These arrows represent the past VIX Bollinger Band buy signals. When the VIX was below outside its Bollinger Bands, closed back inside, these were all buy signals. But right now, the Bollinger Bands are pinching, so monitor that. Next, chart number 34, here's the PMO indicator system. It's kind of a breadth type of indicator. I don't show it that often, but this is on a sell signal. It went on a sell signal last Wednesday, so just be aware of that. It goes on a sell signal when it falls below that 66%. And chart 35, here's the triple Qs and the triple Qs equal weighted. Now, one thing you notice here, look at this divergence. Equal weighted is lagging. All right, now this can be rectified with equal weighting, making another high, but you do have a divergence. But you can see the two are, pretty much 99% correlated. They trade together, as you can see, but when divergences show up is what you want to pay attention. Could be near inflection points. And chart 36, here's the S&P McClellan oscillator. Like I said, the S&P has been mostly hanging up here, but the McClellan oscillator has just dropped off a cliff here, showing you some of the negative breadth in the market. All right. So just be aware of that. And chart 37, another thing that monitor, this is the S&P versus high yield corporate, just like on the chart I showed you above with the Qs and equal weighted Qs. This moves together. You get divergences sometimes like you have right now. High yield corporate is weaker, lower high. S&P had a higher high there. So you do have that divergence. Moving to the bond market, chart 38, here's high yield corporate itself. So, they have this little slight channel. You got the demand zone below here, 50-day moving average, so that's your big support. The market really needs high yield corporate to start rallying here. If this could rally and break up, signaling a breakout to a new high, that would be positive for the market. Market likes to follow high yield corporate, so this is lagging, needs to improve. Next, chart 39, here's TLT 20-year bonds. Remember, they've had a nice pullback. Now, you can count 5 waves down. Doesn't mean it's complete, but because of that, I am on the watch for a bounce. Now, Friday had a nice pullback. We're right around the 200-day moving average, though. Here's a way to play a bounce if you felt like it. TMF, that's the triple leveraged of TLT version. So, next, chart 41, here's the 10-year Treasury yield. This has rallied strongly from the September lows. Market's held up pretty well considering it's up in the supply zone, and it's still quite strong. Chart 42, here's the weekly version of the 10-year Treasury yield. Remember, I drew this about a year ago, this potential ABC pullback, and boy, this so far has played out. Came down to the demand zone, 144-week moving average, rallied right off of it. That said, is this going to rally to a new high? If it did, then I think the market would be in trouble. But this could be some sort of complex thing. It may form a lower high in here, then consolidate. Market could still push higher. But this has had a nice rally off that area. Chart 43, here's another version of that chart that I drew, like I said, a year ago. And this basically is bounced right where I had projected. And the final chart, chart 44, here's the big picture view back to 1980. Remember, guys, long term, the 10-year Treasury yield is now in a secular bull market. The secular bear ended officially whenever we broke that 35-year downtrend channel line. That was in 2022. So the long-term trend for interest rates is higher. Doesn't mean you just go straight up. So you could see that was a big support around that 3.2% area, 3.25. Resistance right now is around the 5 area. And chart 45, here's the yield curve. Remember, this was inverted the longest in history. It is no longer inverted, but it's been basically the best indicator of a recession. And that's why I still think, guys, a recession is in our cards, regardless of who gets in, president or whatever. It's coming. Okay? No soft landing. And I would be happy to be wrong, okay? So I don't need to be right. I'd really be wrong on that, but I think I'm right. Chart 46, moving on to the sectors. Here's XLK Technology. You can see on Friday, tried to break out of the little pattern flag, but then came right back in it. Again, a target would be at least testing those highs. Next, chart 47, semiconductors. Also pulling back on Friday. Still kind of just chopping around here. They have that open gap above they never filled, and they've been weaker than the Qs. Next, chart 48, here's the banks. Nice pullback here. Again, first off, that bullish ascending triangle played out absolutely perfect. Nice rally from there. You could have caught that as a trade. Right now, consolidating a bit, a little double top. Chart 49, here's financials. Again, that pattern played out as well. I put out, again, a few weeks ago, some long ideas in this area, such as FAS, KWeb. Hope you guys played that. Next, chart 50, here's utilities. They're pulling back here. You can see the last time they bounced off that demand zone, made a slight new high. That new high had MACD divergence. So this looks a little toppy to me here. Chart 51, here's biotech. Still holding this trend line. I'm going to watch this. Kind of has this ascending triangle look, but we really need to see small caps start finding some footing because biotech tends to trade with small caps, as you know. Chart 52, here's XLY, consumer discretionary. So that ended up being a perfect little three-wave ABC pullback. Remember, ABC three-wave pullbacks are buying opportunities and uptrends, and made a slight new high last week. Chart 53, here's real estate, also pulling back quite strongly. Remember the last time rallied off that demand zone. The home builders are quite weak. I'm not showing that chart in here tonight. Chart 54, here's XLE energy. Honestly, this is holding up quite well considering how weak crude oil is. It's basically been consolidating since the April highs. Right now, the main thing is here it's holding above the 50 and 200-day moving averages. And you have the moving average ribbon starting to pinch here. So let's see if it can hold this area. Next, chart 55, here's the Chinese market, FXI. Remember, this market had a hell of a rally out of the inverse head and shoulder pattern. Our KISS systems caught that, got very extended. You could see that's how when these moving average ribbons are useful. It was too wide up there. It was due for a correction, which we've gotten. It was tight as heck back in September, and that's when we got the big rally. Again, that was news induced, but still, it was set up in the chart. And since then, we're just consolidating. China needs a lot of work, guys. Their economy is just not doing well. So it's definitely a wild card and maybe a possible canary in the coal mine in the longer term. Next, let's move to commodities. Chart 56, here's DBC, up 2.1% for the week. Again, otherwise for the last 2 years, it's been stuck in this rectangle pattern. Chart 57, here's the DBC SPY ratio. So that's the S&P that's DBC commodities to the S&P. Again, ratio. S&P has been outperforming commodities for years. That said, things could change sometime in the future. Look at this wedge developing. So we got to keep an eye on that ratio. Chart 58, here's crude oil. There's the daily chart. Again, downtrend channel. We're well below the 200-day moving average. Last bounce, we had a little ABC. Again, we're in a downtrend channel. There's a little uptrend line here. Just chopping around, honestly. And chart 59, here's the bigger picture weekly view. You can see the long wedge last year and a half we've been in. Again, we're below the 200-week moving average there. Next, chart 60, here's natural gas, UNG. Remember, this thing was up over 30% last week. And, rallied right off that long-term support. Look at that. It was a heck of a trade. Now it's right around the 50, 20-day moving average. That could be some resistance area. That 200-day moving average has been one heck of a resistance, though. Chart 61, here's the 60-minute chart. I pointed out this falling wedge basically over a week ago. And you had a nice trade out of that divergent low. There's a gap here, open gap, that it hasn't filled either. MACD still looks pretty good, so I still think this pushes higher. Next, chart 62, here's copper. Again, it's been pulling back here. It's back into this demand support zone. Moving average ribbons pinching. We'll see what that does. Chart 63, here's DBA agriculture. Again, so after that new high, that black candle back in September, so far we have three-wave pullback. Now that is potentially bullish, so I'm going to watch this and look for a potential buy signal if I get one. The KISS high performance is flat, so that's another thing to monitor. In chart 64, here's the monthly DBA. So far down 4.8% for the month. Again, it's been in a bull market since 2020, DBA. So far, logical pullback at that first supply zone. I do think it works higher over time, though. Next, chart 65, palladium. Here's the weekly chart. Man, up 9.6%. Look at this absolute gorgeous textbook chart, guys. Nice bottoming pattern here for the last year. Huge volume coming into it. Broke out of this little wedge. Back tested it on light volume. Strong volume. It's meeting my first target area, the first supply zone. My next target would be up here, 140 to 50. That's a heck of a percentage move. And you can see the moving average ribbon. Remember, been tightly wound here, and it's just curling up. So this thing looks fantastic. Chart 66, here's the daily. You had a nice coil there, higher low. That was a good area to buy some as well. Nice breakout. Short term extended here a bit, but the weekly looks awesome. Another one to monitor is platinum. Now, platinum here has been basically coiling for the last 4 years now. So one to watch. Eventually this will break as well. But remember, this is a monthly chart, so been forming since 2021. And Charter 68, uranium, finally a pullback. Rallied off my long-term support, of course, a couple months ago. Finally pulling back. Again, this is in a long-term bull market as well. And Charter 69, here's the monthly view. Again, like I said, it's in a long-term bull market. I identified this back in 2020. So my major target has always been around this 40 to 45 area. So that's still up there a ways. Next, Charter 70, here's Bitcoin. This is the weekly chart, down about 2% for the week. You can see, again, to me, this is a bullish looking chart. That last low was a wave 4. I think this eventually makes a new high in a 5. Charter 71, here's Bitcoin on the daily. Like I said, we did pull back a little bit off that downtrend resistance line last week, but we have a higher low in place here. I still think this works higher based on that weekly chart above. Now, following up on some of the crypto trade ideas we've had, here's CFR. Was just a beautiful inverse head and shoulder pattern look, coil pattern. It's really moved nice in the last couple weeks. Congrats if you bought that one. Charter 73, Wolf, was another nice one. In fact, it's got a cup and handle look to it now, so still one to monitor if you missed it. Charter 74, Irene, here's another one. Clear resistance at 970. This is one to watch as well. And a final one, Wolf. This one looks pretty good and a nice pop out of that coil. It's pulled back to the 9 EMA on light volume, so it looks like it's trying to flag here. You can see the moving average ribbons pinching. So crypto market looks good. Let's move on. Here's US dollar, chart number 76. So far, we have a 4-week rally. You can see it rallied off that major support. Chart 77, here's the daily. Again, remember I talked about that 5 waves to the downside with MACD divergence. One hell of a rally out of there. In fact, it still looks fairly strong here. Could be flagging. Boy. Chart 78. Now here's a 60-minute chart of the US dollar itself. There is one hope for the bears, which would be bulls for the market, would be you got a little slanted head and shoulder here. But again, need to take out this 103.90 area. We'll see what that looks like coming into Monday. And Charter 79, if the dollar does start to pull back, still monitoring this UDN. That's the inverse ETF for the dollar, but you can see it's still downtrending. There's some active divergence and stuff, but it's still in a very strong trend. Oh, one other hope for the dollar trying to bounce is the Japanese yen. So the Japanese yen's been pulling back for the dollar, but notice it's back testing the broken downtrend line and the 61.8 fib. So that's a big support area. So this is a logical area for the Japanese yen to rally off of and for the dollar to pull back from. Let's move to precious metals. Chart 81, here's gold. Again, this is the daily, still just chugging along here. So far, maybe, just 250 points from the 3,000 target area that I've been targeting. You got an uptrend line here. That's your first big support. You do have MACD divergence. That's a concern. It could also be blown out. Like I said, I think we either pull back soon in gold or we just go up parabolically to 3,000. And I know you might say, well, you're saying one or the other is going to happen. Yeah. But my point is I think we're at an inflection point here. We either pull back very soon or we just rock it up. So just be aware. We're at an inflection point. Next, chart 82. Here's the monthly view. Again, just shows that we're in this monster wave 3. Eventually, we'll have a wave 4 pullback. By the way, that demand zone below is so far down now, seemingly. But boy, this gold has had one hell of a year. Chart 83. Here's the inverse gold ETF, GLL. They could use it as a hedge if you think gold will pull back, but so far just monitoring this one. And chart 84, here's the weekly view of gold. Again, you can see it's literally going parabolic. We're in some sort of wave 3 of 5, at least how we look at it. Okay. Next, chart 85, here's silver. Again, it's been uptrending, hasn't been as relentless as gold, but we do have higher lows in place. Chart 86, here's the monthly view. Again, I love the monthly view of silver, this big 4-year coil. Again, I think this goes eventually to all-time highs. So this is, to me, easy swing. I've talked about this since last March. Next, Jabber 87, here's GDX. Again, down here the last couple days, or down for the week. So that is one concern with gold, a little bit underperforming. Otherwise, it's still in this uptrend channel. Jabber 88, here's the monthly view. Again, we broke out of this monthly coil, 4 months ago. Over time, one target is that supply zone above. As far as trading individual stocks, guys, be careful. Here's Newmont. So Newmont's the largest component of GDX. It's like around 15%. Anyway, the chart was strong here. Look at this. Earnings. And look what happened on earnings. Earnings are generally a crapshoot, especially with these mining stocks, guys. My suggestion is never really to hold these into earnings, because more often than not, I see this kind of thing with these individual stocks. All right, guys, moving on to trade ideas. We've had some nice ones. Here's YPF. One from last Thursday I put out was a flag pattern. Nice little pop on Friday on some expanding volume. Still looks good for follow through. Jabber 91, IBRX. This was a long idea of mine from the previous week, and it was consolidating here. Finally started to trigger here on Thursday. Well, it actually triggered on Wednesday. I bought it there, and then boom, monster breakout on Thursday. It looked good for follow through, and bam, on Friday it hit almost 750. So from this area was more than a double. Congrats if you caught it. I caught this one. Jabber 92, here's NVIDIA. Continues to work out. You can see that bullish triangle has been playing out. Jabber 93, here's Rocket Lab. One heck of a trade from that coil pattern. Again, this to me hit his profit target on Thursday. It was a great trade. Jabber 94, SNCY, another nice idea that triggered over a week ago. Still looks okay here. Great trade. Jabber 95, NPWR, another amazing trade. What stood out to me here was the base and the volume. I pointed it out when it broke through that resistance at 7, but the next day took off, and it's just been relentless. Heck of a trade. Jabber 96, SDRL, another one I put out last week. Looks like a slight trigger here on Friday. I mentioned it could be momentum, so it still looks okay to me. Jabber 97, SOC, here's one to watch still. It's in a coil pattern. And Jabber 98, COO, another one to watch. Nice volume patterns. You can see the big old volume patterns. More than double the average volume. Looks pretty good if it can take out the downtrend line. Jabber 99, TCPC. Here's a quarterly dividend stock. Pays about a 16.8% dividend. It is now near the bottom of its range here, guys, so it may be lower risk down here. Now, the next dividend isn't until December, but it is at the lower end of the range. On these dividend plays, I like to buy them after a nice correction. Next, here's some Jabber 100. Here's Google. Now, this reports earnings on Tuesday. The chart otherwise looks great here. Looks like a inverse head and shoulder coil pattern. Jabber 101, Apple was on the 31st, kind of an ascending triangle pattern. Again, earnings are still a crapshoot, but the patterns do look good. Jabber 102, CPNG, nice little uptrend channel, resistance trend line right here at 610 for a long. Jabber 103, COM, little horizontal rectangle pattern, resistance is 655 for a long. Jabber 104, Serve, tight little coil here. If it can break out of here, target would be up around 14 based on the pattern. Jabber 105, VLRS, kind of an inverse head and shoulder look. Nice little coil flag pattern. Jabber 106, Trip, kind of a bull flag here. But if it can take this out, you don't have resistance until up here around 17 bucks. Jabber 107, JCI, little ascending triangle pattern. Jabber 108, Mira, low price stock, nice volume coming into it, resistance around this 50-day moving average. Again, it's a low price stock. And the final one, Jabber 109, SAIA, nice volume the last couple days, Thursday and Friday. I didn't draw any trend lines here, but I looked at an intraday chart. It looks good for follow through. You can see your moving average ribbon is trying to bounce here. So this looks good for follow through over Friday's highs. All right, guys. That does it. We'll see what happens when futures open. So so here's this betting Wall Street week. It's not real futures. It's like a hedge betting or whatever. Anyway, I look at this sometimes, and right now for the Dow, it shows down 3 points. So again, basically, it's saying, that Israel attacking Iran, the market probably doesn't care about it right now. So we'll see where things open here, and we'll see how the market does this week. Thanks for all the support. Have a great rest of your Sunday, and have a good week. Take care.